In this episode of the podcast, Steve Phillips shares his journey from insight agencies to founding Zappy, a company that is revolutionising the market research industry. He discusses the challenges of entrepreneurship, finding the right partner for growth, the importance of AI in consumer insights, and the evolution of leadership within a growing tech business. Steve emphasises the need for human relationships in business and offers advice for new entrepreneurs navigating the modern landscape of work and technology. I hope you enjoy. Hi, Steve. Welcome to the podcast.
Hi, Steve. It's great to be here.
Right. So you are currently, you were the founder of Zappy, but now you've moved into a sort of exec role, chair role, with a few responsibilities, which we'll get to. Our guests are always fascinated to understand how a person has got to their lofty heights when they come onto the podcast. I think I've mentioned to you before, I have a double end. One is my listeners, but also I have two beautiful sons at university who are edging their way through life with hockey and boozing. And, oh yeah, by the way, I'm doing a degree, Dad. They won't listen to me. I've been cancelled, obviously, as a parent, but they might listen to you, Steve. So if you can explain that you don't have to go in a linear journey, it's not all about this or that, it's about experience, that would be fantastic. If you could give us that story, that'd be fantastic.
I could tell you all about it. I should say my son's first proper day in the office of his first ever job is today.
Oh, fantastic. We wish him well. We wish him well.
Yeah, exactly. So I was having this conversation with someone just now. So I started out in market research right after graduating. So I graduated in the recession in the early 90s. And actually, I had no idea what I wanted to do, but I'd seen someone at a graduate fair, those grad fairs where people come and talk about what their jobs are. And I'd heard someone from Procter & Gamble talk, and they were in the marketing department. And it sounded sort of interesting. And at one point, someone asked a question and said to this guy, "Oh, how do you spend your day in Procter & Gamble in the marketing team?" And he said, "Oh, well, it's mostly in meetings." And I thought, as a grad, I could do that. I could be in meetings. I think
and biscuits.
I'm capable of going into a room and having a meeting. I didn't know what the meeting was or was about, but I thought I could meet. So I decided I wanted to get into marketing. I had no experience. It was a recession. It was really hard, and I ended up being a recruitment consultant. Said, "Why don't you get some experience in something related, like market research?" I didn't know what market research was, but I thought, okay, that sounds like a good idea. And I ended up working for free for a company that eventually gave me a job in market research. And I have sort of tried to get out multiple times and never managed it. So I've always been in consumer insight my entire career, and always agency side, never worked client side either. But I've worked in multiple continents. I worked in Asia for about 6 years, worked in New York for about 6 years. And then came back to the UK 20 years ago and started my first company, and have sort of been a serial entrepreneur ever since. So Zappy is probably my fourth company. It's a slight definitional change, depending on whether you count mergers or not. So the previous ones were smaller. Zappy is by far the biggest. But the others were really, really good. They tended to be more qualitative. And then Zappy is a quantitative, so I can talk a little bit about Zappy and how I came up with the idea. But that's a broad brush of my sort of how did you end up here.
And so you had a number of agencies before Zappy, didn't you? That, as you say, we're all in the market research. And maybe it's worth just 2 minutes to set up, then to explain about Zappy. The difference between, obviously, your previous agency you said were more qual and involved lots more human interaction, let's say.
Yeah.
And then you moved this latest venture, which is quite a venture, as we'll talk about, is much more quantitative, isn't it?
Yeah, and it was sort of deliberate. My background had been both. I really liked qualitative research. And I think it was partly because I really liked qualitative research that I thought I could just automate quant.
Right.
So
then you don't have to worry about it on the side.
Exactly.
Really, yeah.
Exactly. It's easy, right? So when I came up with the idea of Zappy, I in my existing agency, I tried to come up with a new way of doing ad testing, And the truth was, I took it to a few clients and they were like, yeah, it's sort of interesting, Steve, but it's not interesting enough for me to switch from the way I'm working right now. And I went home one evening, having had one of these meetings, and sat in my garden with a glass of wine. Actually, yeah, probably several glasses of wine, to be fair.
Yeah. Well, you had to get creative somehow, didn't
exactly,
you?
Got to get creative. And I remember very specifically thinking, in consumer insight, everyone's innovates about one thing. They innovate around the methodology itself. So what questions you ask, how you analyze the data, how you present the data, all that sort of stuff. So it's always around the core of the thing, I suppose. But no one ever innovates around anything else. And then I started thinking, well, what do clients moan about with market research? And the truth is, they don't really moan about methodology that much. They sort of don't mind if it's, Kantar's link test or Ipsos's ad test. What they mind, certainly at the time, consumer insight is great, just takes too long and costs too much money. So I thought, that's interesting. How could I make it a lot cheaper and a lot quicker? And then I thought, okay, the only way to do that is to automate. So I thought, okay, I've got to set up an automation company. At the time, the App Store had just started out, and I thought, I know what I can do. I can become the App Store of the market research world, the consumer insight world. And so the initial idea was literally to take a project that takes 4 weeks and costs $20,000 and make it 4 hours and $2,000. Mm-hmm. So that was the goal that I set out to do. Managed to do that. The hardest thing was finding the right partner to work with. So I know consumer insight very well, but I knew nothing about technology. So I needed a partner. I went through like 4 partners probably in a year who said, oh yeah, we'll help. I've got too many priorities over here. It wasn't that they didn't like the idea. It was just that they were doing other things. And then I found a small company that wanted to work with me. They'd done some of the tech I needed. And then, so I gave them equity in the company, and then we ended up merging. So the CEO of that company became the CTO of Zappy. So effectively, we had, as a company right from the beginning, we had a founder who knew the domain really well, and a founder who knew technology really well, and we worked together very much to sort of structure the company for the first 5, 6, 7 years.
I think that's interesting, isn't it? Because it's nearly as much as you look for that strength, it's being honest enough to identify your own weaknesses and thought, I could do this on my own, I might be able to budget along, but suddenly if you've got a partner who lives and breathes that, like you do the insight side, it isn't. A lot of the guests have talked about that, Steve, about not just certainly giving away some of the business for the sake of it, but if that person, if it was the classic 2 + 2 was more than 4, it was worth it. And it was a bit about being grown up and understanding then how you can accelerate growth.
Yeah. And it's interesting. I suppose, particularly this business, I started when I was in my mid-40s. And I think you approach it in some ways differently. So I couldn't afford, I didn't buy my first house until I was like in my late 40s. So I couldn't afford to wait around for 20 years for this business to slowly build. I needed to go for growth. And if you go for growth, that means taking on investors. It means diluting. It means taking probably more risk in some ways than you would normally. So I approached it in a different way that I wouldn't necessarily, if I mentor a couple of entrepreneurs in their mid-late 20s, and I would give them different advice than I would give myself in that situation because of the time of life. That matters to entrepreneurs.
Yeah, and I'm going to say that it's like you said, the runway they've got 30 years still, and we've only got a few less. Let's be polite. Well, not a few less, more that we want to get on with enjoying the rest of it. So before we go into that investment and everything, do you want to explain now what Zappy does and what its kind of USP in the market is? Because it's a pretty big market. You mentioned a few of the major players in there. There is a bit, the title of this podcast is Swim Against the Tide. You've certainly done that because you've gone into this. You're the Ipsos Moras, your Govs and all this. There's everybody in there, aren't there? And bigger on a global platform.
Yeah, so very specifically, we set out to automate the entire process of doing doing a market research project. So all the way from design, data collection, data analysis, and reporting. So I wanted to give the same experience you get with a market research agency, but through software. So our early sort of vision was to scale human expertise, which becomes very interesting in an AI world. And actually, we were an AI company, or the company I merged with was an AI company right from the get-go. So what they did is they had a reporting engine that looked at a data pattern and then scripted a report on the back end of it. So right at the beginning,
this is before people bandied around AI, wasn't it? 2012, wasn't it? Early, yeah.
Yeah. So it was an if that then this model. So it was an early stage AI model, but it was delivering it. I think there were a couple of things that were very difficult for people to process at the time. One is that you could do a market research project in 12 hours and not 5 weeks. And because of that, people doubted the quality.
Okay.
And you also had to give up some level of flexibility. So the questions were already designed, the analysis was already designed. You weren't inputting into it as a client, but you were getting a report within 12 hours, right? So you could do something in a day. And so there were two things. One is people started assuming it was quick and dirty rather than quick and great, just sort of naturally. And I get that. And we had to fight that perception because we thought, actually, you can use technology to make things a lot better. You can use it to avoid a lot of errors. You can use it to improve quality of data. You can use it to check quality of data in a way that you haven't done before. And you can use it to standardize reports so that, if you test two things exactly the same, you're much more likely to get the same answer from an automated system than you are from agencies that have different people and personalities and views and all that sort of stuff. So we actually thought we were improving quality, but that's not necessarily the first thought that people had. But then the other thing is just a behavior change. I mean, you start thinking about, so the world before Zappy, if you were doing an ad test, let's say you were testing an ad campaign, what you really said as the consumer insight department is the agency and the branding team were going off and they created an ad or created most of an ad and they were excited to get it out. And the insight people came along and said, great, glad you want to do some research. Can you stop doing what you're doing for 4 weeks while I go off and test it? And of course, the brand people are like, don't be fucking crazy. I don't know. I'm going to stop. I need to get on with stuff. So you ended up doing the research anyway, but presenting it 4 weeks later, and they'd already made different decisions and they'd moved over here. So being able to move at the speed that business moves was really game-changing for clients. And that's what got us such traction to begin with, where the insight team could be a genuine, useful part of this fast-moving project. And as clients started working in much more agile ways, developing and iterating on ideas, a system that allowed feedback on each of those iterations became really interesting for them. So that was the biggest game changer, I think, for us. One is overcoming those quality concerns early on. And then the second one was swimming in the tide of agile as agile became a much more natural way of developing ideas, because the things that we do are we help companies understand how consumers will react to their advertising and to their products. So it's really those two things. Pre-launch, what are the likely reactions going to be? And in an iterative sense, what if I change this character? What if I add this feature? What if I change the music? What happens to the consumer reaction? Have I improved the idea? Have I reduced the strength of the idea? And we can help them get that sort of feedback immediately.
Have you found that it's working in any particular sectors, or is it pretty agnostic?
Well, we do a lot in the FMCG, CPG space. That's probably our biggest category. I mean, we also work in financial services and technology and in other spaces. To be honest, it's less about the category and more about the people in that category. CPG, consumer packaged goods, they're sort of the most competitive. They're the fastest moving and most competitive, right? By definition. So they're the ones that are changing their ads relatively regularly. They are updating, they're doing line extensions, they're changing their packaging. And they need this speed, they need agility. And that's probably also true with some tech. So and QSR is big for us, like quick service restaurants. And it's because of the nature of those businesses. It's because the nature of those businesses is very fast moving and agile. They are looking for a fast moving agile provider, and that's how they come to us. So I think it's more the nature of the client necessarily than the nature of the solution.
And their attitude, as you say, to the market. No, fantastic. So like you said there, your other businesses, your original agencies, you'd built what we call organically, didn't you? You'd sort of grafted and build and grew and as you do. Whereas you've taken a different approach to Zappy with that, maybe your own slight urgency on there. And you had some early investment, and then you've just taken on, was it last year, took a very large investment. How it's interesting talking about someone who's come from creative services and things like that. How have you found that relationship with having investors with maybe a slightly different priority? I know everybody wants to make money, but maybe they have a slightly different urge to it compared with yourself.
Yeah, I think it is probably what their priorities are and what their time scale is. And it's probably the time scale that becomes more of an issue than the priority, because the priorities for anyone invested in a company, whether you're the founder or whether it is to create a lot of value and hope that value relates to enterprise value, right? So you want to make the company valuable, which you do by making it valuable to your customers. So you typically don't have any disagreements there. The disagreement tends to be on the timing of the association of the execution of that value. The truth is, it wasn't just me. So bear in mind that I merged with this other company that was a technology company, and there were a few founders in that company, and they were all technology founders, and they were all into computer science and into technology and had been in startups before, and they all watched the Silicon Valley comedy show, and in the tech world, people talk, angel, Series A, Series B, Series C. Which VC are we going to go with? We need to accelerate growth. So that was the language that they already had. They'd been in companies that did a Series A and a Series B and a Series C. In consumer insight, no one does a Series A. No one. I mean, people exit, they sell the company, but they don't normally get investment along the way because you're not building anything.
Yeah,
you're a craft business. You're a craft business. Your cost is people, and you take people on when you've just won a new client. You don't take on 50 people and then hope the clients are going to arrive. That's just not how it works. So, I mean, sure, some consumer insights companies have taken on some investment at some point, but it's rare. It's rare. Whereas almost every technology company is. Some are bootstrapped, but a lot of the fast growth ones are going to take on investment at some point, and certainly it's part of the conversation. So it's part of the natural conversation.
Yeah, and then obviously that is, once you've got a good idea, you want to get it out and get it scaled as quickly as possible because everything is quite replicable to a degree, isn't it? Now, obviously, you're ahead of the game, but with the advent of AI and things can be caught up very quickly, can't they?
Yeah. And I think, if you looked at the business, so the way an investor would look at the business, so we took our first serious investment when we were at about 5 or 6 million revenue. So the investor could look at the business and go, okay, you've got clients, they're staying with you, they're paying money, you're doing 5 things, you could do 15 things, and you're in 2 markets, you could be in 15 markets. The easiest way to get you scaled on what you do and scaled on where you sell is to put money in to expand that capability on the back of already having effectively product market fit. So that as an investment case is sort of what VCs are looking for. That's the standard investment case of you sort of make sense as a company. I get what you do. Clients like you. You need to be in more places with more clients.
Yeah. Can we help you run faster? Nearly, basically.
Yes, exactly. exactly.
And is that the same with the investment you got last year? Because that was sizable.
That was sizable. I mean, a lot of that was secondary. So, and that goes back to my timing point, in that some of our investors had been in for a long time and it was the end of their fund and they needed to. So, um, there was primary capital in there, but it was more secondary than primary, because people. So you're in some ways just turning over your investors and bringing in new investors with some new money, but also a new perspective and a new sense of the time frame that they're interested in staying in. But typically, these funds, VCs have a 10-year fund, and you can go over, and our VC had gone over that 10-year space, but that's not what they want to do. It's not what the fund is designed to do. It's designed to people invest at the beginning, and 10 years later they get a response, they get a return. And with PE, it's probably a bit quicker. It's like 5 to 7 years, but that's how. So, and there's no reason why you can't just iterate with your funding, right? One fund can come out in, and one fund can come out, and that's to a certain extent what happened this time.
All right, brilliant. And so you stayed on, but your role's changed recently, hasn't it? Or was it earlier this year? I can't remember when we spoke.
Yeah, it was October. So it was almost a year now.
Gosh, right, okay.
So I went from founder and CEO to founder and chief innovation officer, and I'm chair of the board as well. But and I can talk you through that because it is interesting. I think particularly for entrepreneurs, I know a lot of entrepreneurs that go through this process. One of the things I always said to the business, and I would say this sort of every year, once a year, is I will always review whether I'm the right person to run the company as CEO, because I have multiple hats. I am in some sense, the most important one is founder and shareholder. Right. So I care about the company. I care about where it's going. I care about where it creates value. And if with my founder shareholder hat on, if I think there is a better person to run the company, then I should be very open to finding that better person and putting them in place. In hindsight, I think in some ways I stayed on too long. So I mentor, as I said, a couple of entrepreneurs, and I think, you'll know this. 0 to 1 million has lots of different challenges. 1 to 5 million has lots of interesting and different challenges. 5 to 20 million has lots of different challenges. 20 to 50, and then sort of 50 to 200. And I think I'm naturally better at the early stages. I think I've been an entrepreneur multiple times. I think that's where my head goes. And when the challenges become structure, scale, standardization, that's not where my head goes. So I was not the best person to implement those structures. And I absolutely believe they're the right things to do. It's just I'm not the best person to do it. So we ended up finding a guy called Aaron, who's great. We got on really well. And he's got an MBA from MIT, and he that's exactly how his brain works, and he's very good at it. And so he's much better off doing that. And I'm much better off doing the sort of innovative entrepreneurial stuff I love doing, but within the size of company that we are. I still have my founder hat on. I still chair the board, but I report to someone who reports to him. I don't even report to the CEO. And actually, it's very liberating for me. So I have no one reporting to me. I have go to no management meetings, none of this sort of stuff. So I'm very, very much focused on just the future, the vision, and as we'll get on to talk about, I'm sure, AI.
Yeah, it is interesting, isn't it? Because a lot of founders I've spoken to have really struggled with the fact that they're not the main person anymore. For one reason or the other, and I think you're completely right. Being able to be honest, to understand there is someone potentially better to do this. Because maybe explain a little bit, what's the actual structure of the business? Because obviously it's a tech business. Have you got lots of employees? Is there lots of admin and things like that? Or is it very much a certain type of employee in terms of dev, and it's all platform driven?
So there's about 300 people, maybe just a bit less. And so it's probably split. So the two key departments are sort of product and engineering, right? So people building and maintaining stuff. And then the client side, the go-to-market side, which includes obviously customer service, so CS, but also sales, RevOps, all of that sort of stuff. And then there's a middle piece, which is overhead, like, where it's the CFO and
The really grown bit, yeah.
ops and all that sort of stuff. But the two main bits are the go-to-market arm and then the creation arm, the engineering arm.
And so is there a natural entrepreneurial spirit that you've created throughout the whole company? Like you say, although your partners were tech guys, they're obviously running their own thing. They built their own business, isn't it? It wasn't as if they were all sat in a dark room not wanting to talk to people. Yeah. Or maybe they were.
No, I think like anywhere, there are some entrepreneurial people, but in a business now that's our scale, right? I mean, so we're reasonably big. We'll do over 80 million this year in revenue, and we've got some big clients that depend on us across multiple geographies. That's important stuff. We've got to make sure it's accurate. We've got to make sure it's really strong. We've got to make sure we listen to them and update them and integrate the changes that they need and all that sort of stuff. That's not entrepreneurial. That's running a smart, well-structured business. And you need people who are not entrepreneurial, but you also need people who are entrepreneurial. So you need a mix. It's like it with anything. And the art and science of it is getting the right people in the right seats to make sure you're still being innovative, still moving towards the vision, but also managing great, wonderful client relationships that are pretty significant in a non-sort of flaky entrepreneurial way, in a much more structured way. So you need both.
So have you found then, obviously through the years, that your leadership styles has to morph and develop from where it was maybe with a smaller classic agency setup?
Yeah, and it's not just me; it's people around me. So if you think about a business that with 15 or 20 people in it, everyone is a generalist. Right? Literally everyone is a generalist. So you're the CEO, you're also making tea and writing product reviews, and you're the CS person, you're also hanging out with engineers to make sure that the technology they build is right, and you're getting the lunches in and negotiating rent review contracts and all that sort of stuff. So everyone is a generalist.
Number of hats on the day.
Exactly. Yeah. Everyone is a generalist. Well, you get to a company our size, and actually you don't want generalists anymore at all. Everyone's got to be a specialist, because they're in a specific department, and within that department they have a specific role. But it can be very difficult for people to adjust from one to the other. And for some people, it just doesn't work because they're much more of the early stage people, and they go off and hopefully set up a company on their own, which is wonderful. I'm really excited about all the company. I mean, we've had multiple people leave Zappy and go off and set up their own business, which I think is fabulous. Or they go and join a smaller company, which also happens. So I think maybe it's just an age thing. I think you recognize that there are moments that work, and then those moments for some people are gone, and they need to move on to another moment somewhere else, or doing something else within the business, and that's okay. That change is natural, and should be celebrated, not tried to avoid it.
Yeah, I think that's it, isn't it? And it's never a personal thing, is it? People, like you say, you've evolved over your career, I have, everybody else has, and it's just understanding that there's times when they don't even have to be selfish, but they've got to go and follow their dream, and they can't achieve it in, say, the way the organisation has grown from that point of view.
Yeah, absolutely.
So go on then. You obviously were you got some partners that were at the forefront of AI and automation and kind of machine learning side of it. Reading a lot of the stuff you've put out recently, this is starting to turbo the business, isn't it? Somewhat now, with some of the innovations that you're bringing into the product. Do you want to explain a little bit of how you're seeing the future?
Yeah, sure. So I think so. The great thing about consumer insight is that we get really rich data about people and how they react to things. So if you do a survey, you'll really understand. So if you're comparing it to like clickstream data may say, I like this ad, don't like that ad, but it doesn't tell you why, and it doesn't give you any relationship between you and the ad. Whereas if I ask you a series of questions, include, why do you like it? What's good about it? What's bad about it? How do you see yourself in it? So if I have that depth of insight, it's really powerful insight. The problem with consumer insight data, though, is it's rich data, but small data. So if you think about the other data streams, they tend to be big data, but thin. So clickstream data is a classic example. Lots and lots and lots of data of yes, no, but it's just yes, no. It doesn't tell you anything about it. The interesting thing that Zappy is in the position of is that we have lots and lots of standardized tests of advertising and lots of standardized tests of innovation. So because we have that large data asset, you can start using it to answer different questions and integrating it with AI in different ways. So you can go from, at the moment, you might say, okay, I've got a new ad that I want to test with young men in Thailand. And any of us or our competitors can test that ad in Thailand, say young men like this, they don't like this about that ad. What we can do, which is different, is you can come to us earlier and say, what do young men in Thailand like about advertising? Okay. And we have a big, rich data asset, and we can immediately say at the click of a button, oh, they like the humorous ads, they like these colors, they like these characters, they love dogs, they hate cats, all that sort of stuff.
And sorry, Steve, you're pulling those trends, like you say, from lots and lots of previous other completed surveys and programs that you've run.
Exactly.
And building like, that's fascinating. Yeah. So we start to cause inspiration, nearly. Yeah.
Yes, exactly. So that's it. So I think in the old world, Consumer Insight did two things. It helped optimize and validate ideas. Now we can inspire, optimize, and validate ideas because we have that data asset and because you can access it in real time. Now, so that's meta-analytics. Now, when you start applying AI on top of it, you can then say, given that you know all about these people, let's say you're a beer company and you want to create a new beer brand for young women in Texas. If you have our data asset, you can say, okay, tell me about young women in Texas. I want to know about what they do, how they spend their time, inspirational data. Tell me what sort of beer brands they like and why. So I've got real depth of connection to the category. And tell me about what sort of advertising they like and what sort of brands they like. We also do brand work. With that data asset, you can say to an LLM, can you use that data to create a new beer brand? So we can now not only inspire, optimize, and validate, we can inspire and then create through the LLM and optimize and validate. So now what we can do is become the innovation arm or to a certain extent, the advertising arm of an organization, because we can innovate in terms of create new product concept ideas. We're not building them, obviously, but we can create the full developed concept. And we have an agentic interface to help companies create that type of new product idea. And we can add into your existing advertising infrastructure to inspire and help create alongside creatives, and also flow all the way through to help you take an ad that you've developed that works in the States and put it in and find out what you need to do to make that relevant in Romania, and also to potentially create a static ad out of it in terms of the best pieces of that ad or a poster. So we're trying to embed ourselves much more closely in the advertising and product creation processes of our clients, so that they can, instead of the old world where you sort of have creators and innovators coming up with an idea and then testing, we can have consumer insight embedded in the process throughout that process. So we can make sure that the incredibly rich, detailed, wonderful data that we have is not just utilized at the end, but is a core part of the development process that our client go through, whether they're developing new campaigns or new products, new things to sell and new ways of selling.
That's amazing. And you've got this sort of, like you talked, obviously a lot of references were global. So you've got this now globally. So like you say, if you can get hold of multinational clients, they can utilize something that works in the UK, in the States, in China, etc., etc.
Exactly.
And you're seeing that growth. So there's a lot of chat in the industry about synthetic panels. Is that's different to what you're saying there, though, isn't it? Or is it a build on that?
It's a build on that. So we do use synthetic. So there's a lot of talk about synthetic, and then you can you can either say synthetic panels, or you can say digital twins, or you can say synthetic data. And there were discussions, lively discussions within the industry about which is the best way to go. We have done a lot of work on synthetic. We look at it. So the thing that is definitely true about synthetic is the more data you have about the type of thing you're trying to predict with synthetic, the better your model will be. So if you say, I've got a lot of data about what colors people like, and I'm going to use that to create a digital twin that will answer questions about colors, then it will work really well. But if you then ask that digital twin about what records it likes, it's going to be completely made up. It's going to be utterly inaccurate, or it's just going to come with a base LLM model training. So the way we look at it is not creating a synthetic panel, because you can't have a panel of things that is trained on all data, but instead synthetic data to answer questions about things that it's trained on. So, for instance, you take our advertising. We can predict how people are likely to react to advertising because we've tested lots and lots of advertising. We've had 20 million conversations with people about advertising. Turns out that data is really powerful when you're trying to predict how people react to advertising.
Yeah.
It is not very good if you're trying to predict which brands people like, or what colors they prefer, or what records they like listening to at the weekend. That's not what it's good for. It's good for predicting advertising because it's trained on advertising data. Similarly, we have talked to a lot of people about innovation. So we have two different models, one for advertising, one for innovation. We're not trying to create digital twins. We're not trying to create digital panel, synthetic panel. We're trying to answer questions that are specifically related to the training data that we have. So I would put us more in the world of synthetic data than I would synthetic panels. But to be fair, we do that by creating effectively synthetic respondents who answer questions about the thing that that respondent has been trained on.
And do you think the push within the industry is back to cost? Obviously, like you say, if you're having to get, time and cost, again, that was the original problem you were solving when you started Zappy. And do you think people are jumping on that, let's say, even if it's, 90% statistically valid or something? I don't know what the figures are for synthetic data, but is it, do you think, because people just think, well, we can't really afford to do that, but we can if we do it with a synthetic panel or synthetic data?
So I think cost is one element of it, but I would relate it to more to risk. So if what you're doing, so bear in mind that there is a margin of error on real data, and then there is an additional level of margin of error on synthetic data, and so you're effectively squaring that margin of error. So you're never going to be as accurate as you are with. So if it is a significant decision, should I release this new can of Coke? If I were you, I'd use real respondents, because I'm certainly not brave enough to release a new can on the back of something like synthetic data. However, if it's I've got this new can, but I want to do 15 different variants of it, and I've got 30 ideas, which of the 15 should I use? Well, maybe you use synthetic for that.
Yeah.
So where we would use it, say in the world of advertising, is I would not use it to test your main piece of video, but you're probably testing 5 or 10% of the assets that you create. Right, so you're creating a lot of digital, you're creating out of home, you're creating multiple radio ads, you're creating stuff on podcasts. Most of them you're not testing, almost all of them you're not testing. There is a role, I think, for synthetic to give you really good insight about which one of those will work and why, and what you could do to improve them. Very fast turnaround, not as accurate as real, but in a world where you're spending, $1 million on creating your core piece of video, but $10,000 on a piece of digital, test the digital with synthetic, test the main one with real. So I think what I hope it does It isn't an alternative to real, but instead it embeds consumer insight throughout the process rather than having it just for that one sort of key strategic piece, and actually enhances the role of insight so that you can have insight throughout your campaign and your creation process.
Brilliant, brilliant. And what other innovations are you seeing coming with Zappy and in the research world? Or is it just trying to bed in those AI things now? And
Well, so I would say AI is playing multiple roles. So it is making our reporting, for instance, and other people's reporting an awful lot better, right? So the LLMs are just great at writing reports. You point them at the right data in the right way. There's a lot of skill to prompting, but then that does a lot. They're very good for quality. I would say the two key areas that we're using AI on outside of just making our core product better is synthetic. Synthetic data will enable clients to do a lot more very interesting things that I think is really powerful and important. And then the second place is agentic. So I mentioned we have agents helping clients create products, create campaign ideas, or localized campaign ideas. And those agents are really interesting. We're creating a multi-agent world where the agents are talking to each other and those agents play different roles. And I think particularly in B2B world that we are, if you think about any organization, that company will have an agentic workflow soon. I mean, in the next couple of years, and almost everyone will have a bespoke trained agent helping them do their job, making sure they don't forget what data they collected 2 years ago, instantly reminding them of the insight they've already gathered that they can access. And that sort of agentic interface is available now to our clients, and they're beginning to use it. And I think that makes them significantly more productive in their job. I think it's a really interesting use case in the B2B world of agents.
That's brilliant. So, question for you then. Obviously, when you built your businesses, they will have built initially on human relationships, on you going for lunch, taking them out, and all of that sort of thing. How important are human relationships now in selling Zappy and obviously delivering Zappy?
Yeah, it's still very important. We had a customer insight conference last week in Chicago. I was there talking to multiple customers and clients and helping them think through the future. I think we're at a really powerful moment, both for businesses generally and for consumer insight, where the role is changing, the way you use it is changing, the roles that human beings play is changing. Do we have all the answers? No, but are we working with customers right now so that they can start envisaging the future in their world? And that's the hardest bit. Is not the tech now that we've built the tech. We know what agents look like. We know what LLMs look like. We know what synthetic data looks like. Yeah, we've got still lots of work to do and engineering to do to roll it out across different domains and all that sort of stuff. But that's work that we know and understand. By far the hardest work to do now is on the customer side, changing roles, changing workflows, changing responsibilities. And that is a human role.
Yeah. And it is, isn't it? Because the way you can describe it answers the questions that somebody will still have at this stage about this is still very new, isn't it, to a lot of people, what you're doing. Yes, you've been doing it for 13 years. The business has been in existence, hasn't it, already? But it is, we still need to that. Steve, how does it work, mate? Am I going to be right? Am I going to lose my job if I bring you on board?
Yeah. Exactly.
That's brilliant. Gosh, I've got so many. In terms of that, you've recently written a book as well, Steve. You just thought you were a bit quiet. You had half an hour.
Nothing else to do.
How was that process?
Well, it was really interesting. It was
and plug your book as well, obviously.
I will. Consumer Insights Revolution. Thank you. No, we wrote it with Pepsi. So we had been working and have been working with Pepsi, who have been wanting to digitize their insight department over the last 7 years. And they took a really proactive stance about wanting to change the way they worked, wanted to change the way insight was viewed within the organization, wanted to move from being order takers to strategic partners. And we recognized that to do that, they needed to have a much more sophisticated way of looking at managing, accessing data. a more standardized way of doing consumer insight testing, so that the language of insight was the same across the whole business. And they picked us as the core partner for that. And so we wrote the book really about that journey, in order to let other customers, the potential clients, think through how that could work in their world. I mean, we've done it with a few other companies, and some of it introduced by Pepsi, who wanted us to learn lessons from other people as well. And so they feature in the book as well. It's really about trying to digitize the insight department, and then in the future look to have AI on top of that digitized data platform, and thinking through exactly those roles and responsibilities, and how that world changes and how you make those changes. And that's really the stuff Pepsi were talking about, because they were writing about the process that they had gone, process of change.
I think that's a really interesting point generally, isn't it, with how we're seeing AI come into the industry. You've got to understand what you're trying to achieve and the processes that you already know work in our world, and then use AI to make them more efficient, to improve it, to give people more, human beings, more time to be creative and to build relationships and to cement long term, rather than get it to go, how should I write a brief for market research? It's just going to be
exactly right.
Well, yeah, it's not going to be a nice output, that, is it? That's brilliant. So look, as usual, coming towards the end of our time, and we've carried on too long, Steve. I always get into trouble. So you said you mentor a couple of people. You've got your young son who's just started his career today, as we speak, in September. So if you were to give them advice, rather than yourself advice, because you've had too many goes at building companies, you're not allowed to give your younger self now, you've passed that. What advice would you be giving to people now entering, not necessarily the market research world, but the world of work, and how because you're really at the forefront of seeing how technology is intertwining with a traditional industry. So what advice would you give them?
So I would say two things. One is get heavily involved in AI and just play with different models, trying to do different things. I mean, from anything from, sorting out where your next holiday is going to be to how it could impact your work. So pile into AI and play with it. And the second thing is learn, be a sponge. I mean, the access to information and the simplicity of that access. I mean, I listen to podcasts all the time, and I would have loved them when I was starting out. The ability to hear from other people who have done interesting things, who know about different spaces, who keep up to date with technology, it's just amazing. So, your ability to learn and your ability to play right now is so dramatically different from what it used to be. So make sure you pile into both.
Yeah, it's interesting, isn't it? There's no excuse now. We used to go for a job interview when we were 19, 20, whatever. You'd be lucky if you could find anything on the business that was maybe from
exactly.
a newspaper or something. Now, if they don't rock up with in-depth insight of you, the founder, the business, the main clients, the recent work, it's there, isn't it? And so you need to sort of be a sponge, don't you? And it's exciting. I suppose develop your skills to say, I've got this information. How do I then utilize it? Which is the key with all of this, isn't it?
Yeah, definitely.
So brilliant. So do you still get involved with you founded or with you co-founded with the Supper Club networking? Is that something you're still involved with?
I'm a part of it. It's a club.
Okay.
It's now called Helm. It's an entrepreneur organization. So it's about 250 entrepreneurs who just meet on occasion. It used to be called Supper Club because it tended to meet in the evening over dinner and just share experiences and that sort of stuff. So yeah, that's still part of my life.
Still human touch. That's one place, Steve. Exactly. If you turn around, I'm not going to see wires coming out the back of your head. But Steve, thank you so much. It's fascinating that, and it's lovely to hear of a really fantastic marriage of AI. A lot of people fear it, and you can see why to some extent. But then, to your point, look, if it can sort my holidays out every year and find flights and find fares, I would literally pay more money than you and I've got to join us to sort that out for the stress that's always in our household. So open up your arms and enjoy it.
Exactly.
So good luck with this next phase. Good luck with it. And we'll look forward to seeing how the agents start to make a difference now.
Brilliant. Thanks, Steve. It's been fun.
Cheers.